Hello everyone, it is Evan from the Trade Risk on Wednesday, October 7th, here with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, individual names, and then finally some trade ideas for the remainder of the week. We got a lot to cover, so we'll start off with the SPY ETF that tracks the S&P 500, and the bulls had another nice session today, closing up almost 1%, 0.84% on the day, and it came with a little bit of volatility. We did see a gap fill this morning. We saw a little bit of trade to red, but the buyers stepped in and brought us back to the highs of the day by the closing of the session. So let's recap what's been going on here. We of course have been developing in this range here, basically all the way down from last week's lows down at 187 to the highs of today at 199, 200. These zones that we have drawn here on the charts. Now, last week we came really quick off of the lows here. Effectively, I think this was the day to take notice on Friday. I wrote this a post about this on the weekend, that Friday was indeed a day to take notice. The way we reversed from the lows on bad economic data, on some negative sentiment, on bad technicals. There were a host of things going against the market on this Friday, especially when we opened up down, over 1% on the day, and we saw that big reversal. We saw the breadth completely reversed from strongly negative to strongly positive, and a monster close on the highs, taking out some important short-term levels of resistance. So that was the day to really change gears, get off shorts, at least lighten up shorts, whatever you need to do. But this was certainly a day to take notice. And of course, since then, it's been a march higher. We came into this week, Monday, with a strong session here. We basically went sideways yesterday, and now we're continuing higher once again. So we're at the top end of this range. We've completely flipped from one extreme to the other in very short order, and the internals and some other indicators are showing how fast we flipped from one extreme to the other. So I'm going to bring up here the Mcclellan Oscillator. Again, don't worry too much about the numbers, but again, the Mcclellan's going to measure internal reading of the market, basically the participation in this recent rally. And you can see here where we closed today. I'm going to say the number, but it's not important, at 184 on this metric. This is the highest all year that the Mcclellan has been. It takes us all the way back to October of 2014 with this big V-shaped rally off of this 10% decline that we saw back in October, coincidentally a year ago, in a very similar situation. This was the last time the Mcclellan was this, I don't like to use the word, overextended, sure, but just really hot to the upside. Now, it does, you can use it in a few different ways. Short term, you could say we are overextended, price needs to come in a little bit, and I would agree with that. Typically, you don't see readings this high, so this tells you that there's just been a big flurry, there's been a ton of activity, a lot of participation to the upside, and it's time to cool off a little bit. So that is one way to interpret this. The other way to interpret this, though, is that for the intermediate term basis, or if you have a slightly longer term time frame, this is extremely bullish to see this magnitude of sort of inflow and increasing activity on the upside. So this is very constructive to see. It's basically a rush to get out there and buy stocks and buy stocks broadly. And I think that is very constructive, and that does potentially speak to maybe we do resolve out of this range to the upside. Now, we may need a few more days, maybe another week or 2 weeks. I'm not going to try and put a prediction here, but I think this gives you clues, though, that this is very constructive action that we've seen on this recent leg higher. So let's get rid of this here and look back at this chart here. So I think ultimately this area is very important. It is now, when we look back at that Mcclellan Oscillator, we can say, okay, we are cooking to the upside. We're a little overextended, and we are coming into some pretty strong resistance. So I would expect some pause here, but again, it doesn't mean we can't grind higher, especially if the sentiment is so negative that many people aren't believing in this rally, or many people are trying to fade this rally, which is sort of the gist that I'm seeing out there. But it remains yet to be seen on how this all plays out. But I think for now, you need to be a glass kind of half full optimistic here, at least in the intermediate term. You want to see how we close this week out and how we end up facing against this $199 to $200 level. Now, us inside the trade risk, we are long. We had our longest, our highest levels of long exposure coming into this week. So basically on Friday, we definitely changed gears and we scooped up some positions last week. And today, though, because of the SPY, because of the Mcclellan, because of other readings, we did put on a short SPY position just to hedge us a little bit, but we are still net long, and we are looking to we're looking for more continuation to the upside. So that's sort of the way we're playing it. We are long, but we are cautious here, and just in the short term, as we bump up against this resistance. Now, if we look at some other markets, IWM, this also similar situation here. It's getting back to this overhead resistance here right around 115 or so. Played an important level back at end of 14, beginning of 2015, and once again, this area should be something to keep an eye on. Now, this has been in a downtrend for a little bit longer than the SPY, a little bit longer than the Qs, so you want to keep an eye on this. Be great to see the small caps punch through 115, try and make a higher high here and try and get out of this range. That'd be very constructive to get this sort of group of stocks participating here on the upside. If we look at the Qs, similar situation here. We're bumping up against resistance, essentially the highs that we failed at a couple of weeks ago. So getting back above 106 or so is going to be important for this one as well. Now, if we look at some other markets, TLT, this one had a strong pop last week, end of last week on this bar right here especially, but it was faded on Friday, and we are coming back down to reality here, basically back below this 123-ish area. So this is sort of a inflection area that we want to see what TLT does here. You can see what's happened here. This last time a candle looked just like this back on Monday, 8/24, August 24th. That did kind of set the move in motion for a few weeks of some downtrending action, and this candle last Friday looks eerily familiar to that candle right there. So have to keep an eye on what happens with this. I think bulls need to get us back above 124 or so, get back above this level, and the trend would still continue to remain intact. We are still above some of the fast moving averages here, so again, nothing too concerning just yet, but we don't want to see weakness continue here, otherwise we could start to roll over and chop it out in this messy range. So we'll have to keep an eye on that one. USO has had a nice session this week, came in strong with a gap up on Monday, and then Tuesday had the big follow through day above 1525, 1530 or so. That was the level that I was watching. We closed strongly above it. Today we cooled off a bit, came lower, closed lower 1% on the day, but all things considered, still above all the fast-moving averages, still above the bulk of supply, so I like this. I'm still involved in this trade to the long side. It's been a long trade in duration that we've been in this, but it's starting to work out in our favor, so we want to see how this closes the week, and we definitely want to see this hold above, certainly above $15, but ideally above 15.25, 15.30 would be a great close to see by the end of the week. UNG continues to sort of struggle here. It's in a downtrend. It broke this support level that was holding for quite some time around $12.50. It's been downtrending since then. Fast moving averages are above price. Not something I'd be very interested in bottom picking. I definitely want to see this stabilize, smooth out a little bit before I try and get long this. I think the easier road right now is certainly on the short side. Gold, this one is back to a resistance area, so back to this breakdown level around 110, 111 that held as support at the end of 14 and beginning of 2015. But gold really needs to get back above that level, but it is trying to stay constructive at the top end of it. So let's see how this one plays out over the next few days. Silver, bullishly leading here as far as metals go. Silver has broken through this resistance area that was some major support that was support late in 2014, beginning of 2015. So it is back above $14.80 this area, and that is very constructive. So if you look at a weekly chart of silver, you can start to see the fast moving averages now are below price, starting to curl up. So for the first time in a long time, silver is starting to shape up, making a higher high here, breaking out of this recent range and pushing higher. So that is constructive there, and that is something that potentially we could be looking for long setups for in silver in the next coming days to weeks. Now, if we look at some other sectors, XLE has been the real strong mover recently, basically, lockstep with crude oil, which had, like we looked at just a short while ago, had that nice breakout to the upside. The energy sector is following suit. It is pushing higher off this nice, almost completed double bottom here. It's making a higher high. It's breaking above this last week's or a few weeks ago's highs, right around $66. So it is constructive. It's a little overextended right now as well. It's reaching away from these fast-moving averages. It's coming into a level of prior supply. So I would expect a little bit of a stall out here, but certainly the bulls have the ball right now, so that is constructive. Home builders is another one, XLB, or I'm sorry, not the home builders, the materials, XLB. Another one that's been really constructive, had a fast move off of the lows here back to these recent highs back from earlier September, been very constructive. And the industrials, XLI, also very quick move. Some of these names really catching a bid, and these are the names that have been beaten up that we haven't talked about as leaders in quite some time. So it might be too early to call them leaders right now, but certainly they're catching a bid, so we want to see how these things act in the near future. And as far as laggards go, it's the healthcare and it's IBB, which have been struggling recently, underperforming. They had a nice day today, but you can see XLV, for example, still underneath some of the fast-moving averages, and IBB as well under the fast-moving averages at the lower end of its range. Almost, we'll have to see, is this going to become like a bear flag, or is this going to be some type of meaningful bottom here after coming off from, from the highs here back in July around $400 all the way down to the lows around $290. That's, roughly 20% or so decline in this industry. So that that could be enough after such a strong uptrend here. Dip buyers are usually pretty aggressive when you get a quick move like that, but we'll have to see how this one shakes out. Now, if we get into some individual names, Apple still range bound, not too much to talk about there. Google at the top end of this range, 675, 680 or so, getting back above there. Then it'll have to challenge the highs at 700, starting to look constructive though, above the fast moving averages. So it's starting to firm up, might need a little more time, but certainly looks actionable in the coming days perhaps. Netflix, this one held support down here. It's working its way higher above the fast moving averages. I think coming back into this 115 zone would be the next level to watch, but for now it is working itself higher in the short term, so that is constructive there. Amazon, similar situation. This is definitely the best looking of these past three. If it can get back above 546, yesterday's highs, last week's or 2 weeks ago's high, that would be very constructive as we would start to work into new all-time closing highs. So that would be very constructive for Amazon. That one looks best in breed there. Facebook, still just kind of mulling around in this range. It's got to get back above 95, 96 to really start to trend to the upside kind of effortlessly. And Twitter, this one was the big one today, up 8% on the day, closing right underneath this $30 nice round number, and it cleared very important resistance. All of this supply in here from basically September and even at the earlier stages of August, we have gotten above that. Price is now making a sort of higher high here, breaking out of this recent range. Very constructive action in Twitter. Just the past 4 days, look at these big green expansion bars to the upside. Nice looking bullish bars that you want to see in there to kind of show the strength and sort of the demand coming in here. So very constructive for Twitter. Let's see if it can continue. If it can get back above $30, price can probably trade pretty quickly once it gets back above $30. There hasn't been a lot of volume that's traded between $30 and $35, so price can move pretty quick once it starts to clear basically today's highs and continue in motion. So looking very good there. It's good to have that one back on sort of the long radar going forward. Tesla, this one's sort of the opposite today. This one's breaking down a little bit. We were watching this area right around 235 or so. That's held as support. It's starting to break below it today, down 4% on the day, so very much underperforming. So you got to keep an eye on this one, but certainly not very healthy action here. It's below all the fast-moving averages and trending lower, so that one definitely needs more time before it sets up for a more interesting trade. Alibaba, this one had a nice session today, coming coming back to the top end here. So this should be a pretty interesting area, $67 or so. It is trying to, looks like it's trying to carve out a base here between, you know, $58 and call it $68. So you get about a $10 range to work with. So we'll have to see if this one and can continue to firm up. It's been in a long-term downtrend, still hasn't really changed that yet. Needs to break back above, you know, like I say, $68 or so to start to get more constructive to the upside. Gopro, finally, last one we're going to look at today before a few trade ideas. Continued to get beaten up today for most of the day, although it did have a nice reversal off of these lows. It was trading, you know, off 10% today to the downside. I think it triggered the old circuit breaker for no more shorts, and we did see a nice reversal there. So, you know, it did reclaim the recent $29 support level. We'll have to see if it continue to hold on here. It's, again, still just a very beaten up name with no real bounce to speak of yet, except for a couple of multi-day short-lived ones. So we'll have to see if this if the bulls can add to this sort of reversal looking candle here tomorrow. But right now is a lot of damage with all the fast moving averages still strongly heading lower above price. Now, looking at some trade ideas into tomorrow, CTSH, this is the first one I'm looking at, mostly on a weekly chart. You can see what's going on here. It's been sort of range bound. It's breaking above the upper end here at $65. Looking pretty constructive. It's had a quick move coming from $60 in a pretty, you know, in 5, 6, 7 trading sessions. So it's had a nice almost 10% move pretty quick, but right now it is taking out resistance. Strong momentum to the upside. A bit overextended, but something to keep an eye on for some future trades. EQC is the next one to look at. This is the I think I had posted this on Sunday as a trade idea into this week, and it is breaking out this week. 2% already to the upside, so I hope some of you guys got to jump on board this one. If you saw that video a few days ago, it is marching higher. It's a really nice looking base here on a weekly time frame, so keep that one on watch going forward. SYI is another one. Started to break out today. If we look at a daily chart, you can see taking out this $41 or $40 level of resistance, breaking out above all the fast moving averages. This one looks really nice. It's been basically digesting this big run up from August that it had from $36 all the way to $41.50. Then it traded down to $39, went sideways very cleanly, and now it's starting to make another move. So this one could start to get in motion again. Looks good to me for further continuation. And then finally, ACXM. This one had a nice move today as well. Look at a weekly chart here. You can see a nice base that this one's been in for a while. It got beat up quite a bit in 2014, and then spent basically the end of 14, last quarter of 14, and all of this year working itself sideways. And now it looks like it's trying to to break out of this recent base. So basically above today's highs. This looks really good for a nice weekly breakout here. I like this one a lot. So I hope that helps. A lot of information, a lot to cover in this video, but hopefully you enjoyed it, and as always, I will catch you next time. Thank you for watching.